to the Real Powerhouse Podcast. I'm your host, BJ Gramillion, and today I have my friend Travis Van Noy, who now lives in Utah and is a loan originator, loan officer. For which company is it, Travis?
First Colony Mortgage.
Okay, First Quality Mortgage. And I know Travis actually from the college days, and so
Go way back.
Dating myself here. It's so crazy that, how long has that been? So we left in what, 2007?
Yeah, 2007 was, 2006, fall of 2006 was when we met.
Yeah.
And then 2007 was when I left. So yeah, that was 17 years ago, buddy.
That is so crazy, man. We are getting old, bud. I reached out to Travis. We've stayed in touch over the years, and it's fun having him in the real estate industry so that we can talk a little bit about housing, what's going on. So we'll obviously get into that in the show, but Travis is just an all-around good dude, and so it's going to be fun to learn about his story, his journey, how he got into his profession that he's in right now, and how he's been able to weather the storm. I think a lot of people are going to be curious, especially those listening that are loan originators, to see what you're doing to survive the storm, because it feels like it's just been relentless now for the last 18 months to 24 months with the Fed doing their thing. So interested to hear, kind of how you've done that. But before we get into all of that, we would love to tell us, Travis, who was Travis before he became this incredible loan originator, father of now four
little boys.
Okay. So yeah, tell us a little about yourself. Tell us about from your background.
Yeah, so I raised in Reno, Nevada. My formative years was then in McQueen High School. After high school, went to BYU, Idaho. That's where I met BJ and his wife Alexis and my wife McCrae. We were bouncing back and forth from our apartments, and that was a lot of fun, a lot of carefree times spent.
And our wives were roommates for a little bit. Yeah, so
exactly.
we got to hang out quite a bit. So
yeah,
funny story actually, just real quick about that you just reminded me of actually, and it just hit me actually. I remember my wife reminded me of this actually last night when I told her you were going to come on the show. She's like, you remember that time that Travis, we had him drive my car and we sat in the back seat and just made out for like 3 hours down to Utah? I was like, that's a great memory. Yes, I do remember that. And he told
whatever it takes,
like, all right.
Dude, yeah, whatever it takes for a free ride. Like, I don't even care what you're doing. I'm getting a free ride down to Provo. Like whatever it took to get out of Rexburg is what it is.
I cannot believe we did that. Think about it, like, really? We did that?
Yeah.
She's like, yeah, I remember.
Yeah.
Anyway, sorry. Keep going.
No, that's funny. No, good times. So after that, served an LDS mission in South Carolina, Spanish speaking. Still use my Spanish today with doing loans. So help. I'd probably say 10 to 15% of my loans are Spanish speakers. So that's pretty cool.
I'm so jealous.
Super, super grateful people to work with. Like they're people that you just want to bend over backward for, because they're going to be loyal to work with you. They're going to be appreciative. And so I love working with the Hispanic group. And so, after mission, went to Southern Virginia University to live out my dream of playing a little bit of college basketball, and played out there for 2 years and had a great time. Southern Virginia University is a really tiny school, basically the backwoods of West Virginia. And just the school, or the town, had 3,000 people in it. The school had maybe 1,000 students in it. So if you know somebody that went there, during the same time, I probably know them. So really tight knit community, and won a little small college national championship that dude, won a little national championship out there. I've got a ring, and I hold it over.
Natty.
Yeah, I got a ring that I hold over Kyle's Super Bowl rings, and I say, dude, you didn't get a college one, so
Yeah, right. He only wishes he
he
had
only
one of
wishes.
those. Yeah.
um,
So yeah, for
yeah,
anyone that didn't catch that reference, we will bring up the elephant in the room, Van Noy. For anyone that saw the last time, and I asked him beforehand, I was like, "Are you okay if we tell everyone just get this out of the way?"
yeah,
So Travis's brother is Kyle Van Noy, who does play in the NFL still. Which, funny enough, I did not realize he was still playing. Because in the NFL, if you're in your 30s, you're ancient,
you're
and
ancient. Yeah,
so I thought he was done, but so he has two Super Bowls with the Patriots.
yep.
Tom
Been to
Brady,
three, 1, 2. Yep, Tom
so
Brady
crazy.
train. Yeah,
You were
it was
there for
crazy.
the. Were you there for the Atlanta game?
Yep, I
Oh
was
my
there.
god! Oh
That
my
was
god!
that was pure pandemonium. Being in the stands while that was going, just people running
Oh,
up and down the stairs, people jumping up and down the seats. Just like it was, I've never experienced an atmosphere like that. Just halftime at halftime, people, Patriot fans had their heads and their faces and their hands, and just you could tell everyone was just depressed at halftime. All the Patriot
sure,
fans, and so experiencing that and seeing that just complete turnover, it was like, okay, and you're like, okay, they scored, cool, that's awesome. Like, I still think there's zero chance. Oh, they scored again, cool. Like, that's still, I don't think this is going to happen. And
no.
just everything had to fall into place perfectly at that game. Just unbelievable. So
I tell you
yeah,
what, that
that was
game I was
wild.
on the opposite end of that because I cannot stand the Patriots, and I was so mad
Yeah.
when they started coming back. I think after they scored that second touchdown, I left. I was like, I've seen this. I know what happens. I am not going to be witness to this, and I
Yeah.
seriously left. I didn't watch the rest of the game. And then
Yeah.
I heard, yeah, sure enough, they pulled it off. I'm like, son of a gun, Tom Brady, you little punk.
Tom Brady finds
Um,
a way. It's yeah, Patriot. Being a Patriots fan was an acquired taste. So when he's done with the NFL, I don't think I'll be a Patriots fan. But
uh-huh.
it was fun while it lasted.
Yeah. Yeah, so and then I
So
just found out he's now with Baltimore, because he's
yep.
actually having a pretty good little stretch right now with,
Yeah.
Dak
He's
and
had, I think, well, he missed the first 3 games just because nobody picked him up, and he was kind of thinking in the back of his mind, okay, maybe my career's over, nobody wants me, and
yeah,
then Baltimore snagged him 3 games into the season, and I think he's had 5 or 6 sacks, so he's leading the team from linebacker position in sacks, even missing those first
I
3 games, and yeah, his story is really interesting because he was he's been undervalued, underpaid, and then he overperforms during the season, which is really unfortunate. Like he's kind of he's every team he's been to, he's kind of been the top performer from his position, but been one of the lower paid players.
Travis,
Um,
why are you not his agent? What's
I
going on
know,
here? Do we
I
need
know,
to
yeah,
talk to him?
yeah. Man, I don't know. It's there's a love hate relationship there with that
I'm
guy,
sure
but
it is. I
yeah,
mean, what a weird profession to be sitting on the
yeah,
couch and then randomly get a call and say, "Hey, can you show up tomorrow?
hmm
We could use you." And yeah, go suit up and figure it out.
yeah,
And I don't know, like that's such an interesting sport, and just kind of another just funny story. Like, and this is going to be memory lane for me, guys. So this isn't like most podcasts, where we have this background. But Travis invited us to his wedding, and I remember, we didn't know anyone really, and Alexis and I think we were just recently married, and so we were just kind of like hanging out, and they set us at some table with some random dude, and we just sat down and we're just talking to him. Nice guy. Doesn't look anything. He's not big, not small, just kind of an average looking normal guy, and but super cool. Like, we just were kicking it, and it's funny. We talked for a long time, and then someone came up to him and was like, hey, Mr. Big Shot, hey, Mr. Because at the time he was actually suspended, I believe, during that year at BYU, and then he was going to come back for the next year
hmm
to play for him, and so we met him during that time, and then I was like, wait, what? What's going on? And then they filled me in.
yeah,
They're like, you didn't know? And I was like, no, I didn't know. I don't know anything about
Yeah.
BYU football, or
Yeah.
I don't follow BYU football. Why would I?
Right.
They're horrible.
Yeah.
And so, anyways, and then after that, of course, then the entire conversation turned to football. And so
Yeah.
we hit it off and had a good time. And it was fun though, because after that, I watched his season, at
Hmm.
BYU, obviously did really well. And then I remember watching that draft, and that was the first time I've ever watched an NFL draft where I knew someone that was going to, be
Hmm.
drafted. And it
Cool.
was such an intense experience for us. So how was that for you? I'm curious. What
Oh
was it like
man, just
for draft day?
yeah. I mean, he was hopefully be a first rounder, and everyone's there. The whole family's there, even extended family and close friends, and it was was it's stressful because you're sitting right next to him, and knowing he's got a million different things going through his mind, like, did I go hard enough? Is this the right decision? Should I be going? Should I have waited? All those different ideas, and pretty disappointed. It's torture that the NFL waits a whole other day between the first and the second round,
Oh, yeah.
because so many of those guys are just up late at night after the first round not getting picked, and so yeah, he got picked early in the second round, and that was awesome, super cool to hear the phone call and listen to the coach talk to him,
Yeah.
you see all the videos that people post of the family celebrations and stuff like that, and that's how it all goes down. It's a super exciting moment because he and I both grew up playing sports. My dad was in Parks and Rec, so my dad would throw us into every sport possible growing up, and um, teams were missing players. He said, "Oh, well, I got two sons that can show up," type of situation,
Hmm.
and so ESPN was on every single night. That whole Michael Jordan top 10 highlight era of life in the 90s, when that was all you did in the evenings was uh, was watch the top 10 before you go to bed,
Oh,
and
yeah.
so it was pretty sweet. The first time he had a play that made it to the ESPN top 10, I texted him like, "Man, think of all those nights we had watching, and you finally made it." Like that was the first moment where I was like, "Man, okay, this feels like it's gonna happen for him," and
And
so
was that when
yeah,
he was
it's
at
super fun.
Detroit that he got in the top 10?
No, he had in the Poinsettia Bowl. If you
Mm.
remember the San Diego State game, he had a strip sack. He had an interception, a strip sack, and fumble recovery. He had an interception, pick six, and basically single-handedly turned the game around and won the game as a defensive player.
Wow.
Um, and so that was where he made top 10. I don't know what number he was, but well, yeah, when that happened, it was the end of his junior year. But
Crazy.
just it
Crazy
was, yeah,
stuff.
just cool because he's my only sibling. We grew up together, did everything together, so it's just so fun to watch him and be a part of
Yeah.
his success. And um, but no, I'm super proud of him and happy he's made an awesome career out of it.
Yeah. Oh man, that's fun. Super cool. Okay, let's
Yeah,
get back to you. So family of four, and then tell me
yeah.
how did you get into the mortgage industry?
Um, so another BYU connection. I went to a BYU Notre Dame football game while I was out at school in Virginia
Hmm.
to watch Kyle, and met a guy that was the owner of First Colony Mortgage while I was out there, and told him I just graduated. Told him I was looking for a job, and no offer or anything was made at that point in time. But I was I was at that point in time. I was working at Lowe's, customer service Lowe's guy right out of college, looking for something to do in that small town of Virginia. There weren't many job opportunities, and I talked to First Colony Mortgage, told him this is, I told him I was looking for a job, and it was something that interested me, and um, it was. I feel like anybody that goes into real estate takes a pretty major leap of faith when they first get started. Um, and McCrae, my wife, had just finished nursing school, so our idea was, okay, let's get this thing started off the ground. She was going to work. Our oldest was about to be born. She passed her NCLEX, the nursing exam, in May. Brooks, our oldest, was born in July. She worked a lot during that first time while she had a newborn, and while we were both working during this time frame. And it was,
Mm.
if you're a Dave Ramsey person, it was beans and rice, type of lifestyle at the beginning. And it took me 6 months to close my first transaction. And that first transaction was a refinance with a guy that I home taught. Like,
There you
just,
go.
you
Make friends and
know?
family. That's where it starts.
Yeah. So, just, yeah, the first 2 years was just a little bit of a bumpy road, and was able to work with a handful of different builders. Started out with those relationships and realtor relationships. And the one thing I really wanted to focus on talking to you about this, and I just reflecting on the 10-year career I've had in this, is I want to talk about loyalty. Like, loyalty in this business
Yeah.
can sometimes be one of the hardest things to find. Like, finding someone, and I think this goes off of what your whole business plan
Hmm.
is off of. I think that's where I'm at in my mortgage career as well. Is I'm hustling. I'm trying to find new deals. Always trying to hustle.
Hmm.
But if you can find your core group of people that that trust you, they're going to be loyal to you, that are going to know that you're going to do a good job. You're going to take care of them. It's going to be a smooth process. Um, then that's really all you need. I mean,
Yeah.
it's because this business can get pretty cutthroat, especially this past year. This past year has just been there's been mortgage companies that have been trying to undercut, that are just taking pennies on a deal just to win the transaction, just to make a couple $100. and
Hmm.
and so the yeah, that's been really a struggle this year. And you can feel it, that there's a couple businesses, and I'm just talking to other loan officers and realtors. There's been there's a handful of mortgage companies that are on the verge of saying, no, where this isn't going to work, closing their
Yeah.
doors. um, so I know I mentioned this before we started chatting, but builders have been the main thing that have kept us afloat this last year and a half.
Hmm.
um, and we have a love-hate relationship with our friend Jerome Powell.
Yep.
And
Yep.
he he was our savior during 2020 and COVID, and then now he's trying to fix that whole problem. And it's it's just been interesting to see how that's been managed. And um, I don't know if you have any
Yeah, it
thoughts
really
about
is. Because I
Jerome.
mean,
Yeah.
like if you think about it, I mean, their job essentially really is to manipulate the market, and they do
Hmm.
so obviously through the interest rate. And so, to Travis's point, yeah, like in 2020, the reason why rates were 2.5, 3.5% in that range was because the Fed dropped the rate down to zero, as most people know. And then they also, were buying back mortgage backed securities. And so
Yeah.
it was a combination of those two things really that
Hmm.
fueled some of the lowest interest rates we've ever seen in our lifetime, probably will ever see.
Never again. Yeah.
Yeah,
Yeah.
like it's just
Yeah.
one of those perfect storms, similar to 2008, where I think a lot of people, they look back on that time frame and think to themselves, "Hey, I'm going to wait for the next 2008." It's like, well,
Hmm.
that's just like waiting for the next 2.5% interest rate. Good luck.
Yep. Yep.
You're going to be waiting a whole long,
Yeah.
in
I
maybe a
saw.
lifetime.
Yeah, I saw a picture of. I saw someone's porch for Halloween was a skeleton holding a cardboard sign that said, "I waited for interest rates to drop." and and and
It's
so it's
so
so true. It's like,
true.
it's you're right. You're right. It's probably that perfect storm's probably not going to come back in our lifetime.
Yeah.
And we're in a situation where it's still really low inventory, and builders are still nervous to break ground.
Yeah.
And so that doesn't help our lack of inventory situation. And then everyone that is in their starter home, that's now their forever home, because they have a 2 or 3% interest rate. And
Mhm. Yep.
So that's why builders have been so big, because the existing transactions aren't as plentiful as they've been in the past, and so that's where a majority of people are going, because some pretty hefty incentives from the builders.
Yeah. Yeah. I think that contractors, builders, the big builders are in business to make money. They're not there to solve the inventory problem.
Yeah.
They're there to sell properties. And so they're not going to do the same mistake that they did in 2008. They are very careful on the number of properties that they are building. They typically don't break ground until they have a contract. If
Hmm.
they do have, any issues selling something, they are master sellers, right? So they're the ones that these resale people are competing with, because they're smart enough to market and say, hey, look, we're going to do all these incentives, 2-1 buy downs, interest rate buy downs, sometimes $40,000, $50,000
Yep.
worth of incentives that they're throwing at the interest rate, just to make it affordable for people that are not able to do it. So yeah, and I think historically, we're at about double the number of transactions of new build versus resale. Typically, new build is
Hmm.
like a 10-15% portion of the number of properties that are sold in any given year, whereas this year it is just completely wonky right now, to your point, where it
Hmm.
is just these new contractors. So yeah, tell us a little bit about, like, what are you seeing with these new contractors? What are they doing that maybe, I guess, people that are trying to sell their home can learn from?
Yeah, no, that's great. It's it's a situation where it's got to be a win-win, and that's the different a change of a mentality from the COVID years, where it was it was I'll give you whatever you want,
Hmm.
of whatever price you name the price. That's basically what COVID was.
Hmm.
And sellers now, if you're selling your existing house, you've got to compromise, and it requires a win-win from both sides, both the buyer and the seller. So what builders are doing that would be good is from an existing home standpoint is, I've seen one builder specifically said that they would do a long-term buy down of the interest rate. They would do a 2-1 buy down, and they would also buy out the mortgage insurance. That is probably one of the biggest incentives that I've seen.
Wow.
Just
Okay.
and
So,
that was just in the last week that was released from one of the builders we
oh
work
man,
with.
yeah, that's a lot of money when you add that
Yeah,
up. Okay, so to buy down from, let's say, 1 point, or 100 basis points, how much
yeah,
is that typically on, let's say, your average median home out there is maybe what, 500,000?
yeah. Let's say that's probably that's probably 10,000.
Okay,
I'd say roughly.
10,000 there.
Yeah,
A
ten
2-1
thousand
buy
there.
down, for those that you don't know and should become familiar with, if you're looking to sell your home or if you're looking to buy a home, a 2-1 buy down is essentially, where in the first year you have interest rate that is 2% less than what you locked it in at. So if interest rates are at 7%, your first year it's at 5%, second year it goes to 6%, and then the third year it goes back up to 7%. You have to
Mhm.
qualify as if it was 7%, in order to get this type of a loan. But for a 2-1 in that scenario, $500,000 home, conventional buyer, what is the cost of that for a 2-1 buy down?
Yeah, I'd say that's roughly 15,000. I would say.
Okay.
And then buying out the mortgage insurance, I mean, that's obviously dependent upon your scenario, loan program
Hmm.
that you're doing. But if you're doing, let's say you have a 720 credit score and you're putting down 5%, that would probably be another five-ish, $5,000 to $7,000 in buying out the mortgage insurance. So
Wow.
that scenario is yeah,
About 30.
35-ish,
Hmm. Crazy.
in a value. So um, and I mean, it's also interesting to see how much margin these builders have to work with. Like I didn't know they have this much wiggle room. I mean, they're taking the biggest risk, so they
Yeah.
uh, they have the biggest, the lion's share on the profit. But and it also goes to show that they don't want anything that resembles 2008 to happen ever again. They're willing to be the first the first to go in and say, hey, we'll offer this. They want to lead that, instead of being the last one saying, okay, fine, we'll lower the price.
Yep.
They want to
Yeah.
lead that and not be the last one to the party. And
And then
so
that
it's
also, I would assume, keeps the price inflated. It shows that, hey, we still sold the home for,
yep.
this price. But yeah, it doesn't show that, they gave $35,000, $40,000 worth of
Hmm.
incentives that you
Yeah.
don't really see, as a consumer on Zillow or whatever. You're looking at that and being like, hey, they still are able to sell it for what they listed it for.
Hmm.
And it's just another way. And then I think this also goes to show, and you probably are having these conversations all the time now with, people that are looking to buy. And I have this conversation often, with investors where they tend to look at the price, right, as the most
Yeah.
important thing. And what we try to educate them on is really it's about the monthly payment, and so it's much better a lot of times to spend that $10,000 to buy your interest rate down a point versus
Hmm.
getting a $10,000 reduction on the actual purchase. So
Hmm.
tell us about that. What are you seeing? Is that right? Curious what your thoughts are.
Yeah, no, I would, in the perfect world where we all have millions of dollars and we can buy a home cash, then yeah, that doesn't make the most sense. But in reality, it's that you're in that 5 to 20% down range is the typical buyer, right? And so as far as, and yeah, that's definitely the conversation that realtors are having, that lenders are having with their clients is because from a client's perspective, from a consumer's perspective, that's the first thing that they think of, right? Is the
Mhm.
price. Um, and so yeah, so at 10,000, let's just say if we use that same $500,000 example, let's say we drop the price $10,000. In that situation, your monthly payment's going to drop by maybe $50 a month. If you use that $10,000, let's say you could use it a combination of things. You use it for buying out your mortgage insurance and lowering your interest rate. If you use it for
Mhm.
those two things, that can be a $200 drop in your monthly payment. So it's um, and especially if this is a longer term home, the overall value of that lower monthly payment, if you have an extra $200 to play with every month, that um, can be used for the $12 dozen eggs that you're paying for, whatever
Mhm.
it is, that extra $200 a month can be used to be reinvested somewhere else.
Mhm.
There's different ways to use that. So that's the value difference, about $150 in that scenario, if you just use it to ask for a seller concession.
Yeah. Yeah. Yeah, no, I think that's been something that we've been pushing as home sellers is just saying, hey, look, let me help you guys understand that there is an education piece and component to it. Because I think you
Mm-hmm.
can still tell people, hey, look, you can still get an interest rate in year one if you do a 2-1 buy down
Mm-hmm.
in the fives, and I think
Mm-hmm.
people are like, wait, no, that doesn't exist. And you're like, no, you really could. So don't get fixated so much on the price. There's a lot more to it if you're financing a
Mm-hmm.
property. And so
Right.
I'm, I'm curious, and I know that you probably look at this every single day, for hours a day, trying to figure out where the market's headed, where are things going to be. And so, I think 2023 for the most part's cooked. We're towards the end of the year. I think it surprised a lot of us the fact that interest rates got up to 8% and that the rate cuts did not occur this year.
Mm-hmm.
So curious what your thoughts are for 2024. What are you thinking? What's your crystal ball telling you?
Yeah, yeah. No, I think, well, just the Feds in their most recent meeting, they just announced that they paused rate hikes.
Hmm.
And I mean, they left the gate open a little bit that if they could keep raising high, this next month, they could continue with another rate hike.
Hmm.
Um, I think the biggest thing the factor that the Feds are looking at right now is unemployment. That's I think the biggest ticker or the gauge as far as where the economy is at. Um, and so my prediction next year is I think spring summertime is when they'll start maybe either just keeping things as not raising or lowering interest rates.
Hmm.
Maybe towards the summertime of next year, start slowly lowering interest rates. Also, with next year being an election year, there's always
Mhm.
some political shenanigans that like to happen during election years. Just in the 10 years of doing this and just watching the track record of election years, there seems to be a drop in interest rates.
Mm.
And my overall opinion is if rates are in the fives or maybe even low sixes, that will get people to feel like, okay, this is doable. And I don't think it's going to be necessarily back to the races unless rates drop to the fours or something crazy like that. But
Yeah.
and we're not going to see crazy multiple offer situations like COVID unless they drop to the fours. But if we're in the sixes or the fives, I think it's a manageable number that could get some people that are in their first home in their condo or in their townhome that want to move up and can get first time home buyers to make it feel like it's a little bit more affordable. And
Yeah.
in all honesty, we don't want them to have crazy appreciation like we had 2020,
Yeah.
2021. That is not a stable market. And if we're having the 2 to 5% appreciation and consistent transactions, both in the new construction and the existing markets, I think that will be a happy place for the market to be at. And
Yeah.
we don't want any whammies, you know.
No.
We don't want any crazy. We don't want war. We don't want anything like that to derail us. And I think there's still so much pent up demand that's waiting. And I think that once we get a little bit of more relief, I mean, once interest rates hit 8%, just in this last week,
Yeah.
it's been the quickest drop in interest rates in a week span in 10 years
Whoa.
from the mortgage world. So we dropped almost 0.75% in interest rates within a week's time frame.
Hmm.
And that I mean the thought behind that is that looks like that could be our ceiling.
Yeah.
And so I think those are my thoughts. We'll see how this next year
Yeah,
goes.
I don't think we disagree on a lot of what you said. I do think psychologically, to be honest with you, I think that 8% was probably a good thing. I
Yeah.
think that people needed to see that number to help reset their expectations because, when the first interest rate started occurring, I think that, and then it got up in the fives. I think everyone was like, oh, I'm never going to buy a home in the
Never.
five.
Yeah.
It has to
Yep.
be at least. And I even did a survey just with, my Facebook group one time, and I asked them at what interest rate would you buy at, and over 70% of them, I believe, were under 5% is the only way they would buy a home. And then, obviously interest rates went up to the sixes and then into the sevens. And then I think that when it hit the eight, they did another survey where they said John Burns is an economist, and he did a survey, and he said the magic number was 5.5%, where everyone was saying that if it was at 5.5, I would make the decision to buy or sell.
Mm-hmm.
And that was about a year ago, little under. It was at the beginning of this year, and so I'm curious to see now that it hit 8%. That
Mm-hmm.
I'm with you. I do think that the magic number is probably more like 6%,
Mm-hmm.
where people are gonna start waking up and being like, "Hey, look, it's not gonna get much lower than this. We just got to accept this is kind of where
Mm-hmm.
things are at." So
Yeah, and the funny thing is it's all relative, right? There's
yeah, it is
millennials
psychological.
and Gen Zers that have been coddled for the last 10 years
That's all they
that
know.
yeah,
Yeah, I mean, it's not.
all they
That's all.
know. I
It's just
mean,
that's all they know.
yeah, so it's really interesting to see the psychological side of it cuz yeah, it's really funny. That's funny that you had that poll because anyone someone would give their left leg to have a 5% interest rate right now.
Right. Yeah. I mean, it's just funny. They would, yeah, like, yeah. And they just all like 5%. Are you kidding me? That's
Yeah,
so unreasonable.
yeah,
So again, goes to the point of don't time the market, and
yeah.
don't think that you're going to sit around, wait around. I can't tell you how many people I've talked to that thought they were going to time the market and missed out on 50% gains. Right. And so
Hmm.
you got to be careful about that. They do have that saying, I'm sure that you use all the time, where it's, marry the asset, date the rate.
Yeah.
And so that's obviously become very popular saying in the mortgage industry, I'm sure. But there's a lot
Yeah,
of truth to it. And so,
yeah,
we're having to dust off all these exotic loan products like the 2-1, right? Like, I mean, I didn't know what that was
Hmm.
until now. It's commonplace for the most part, but
Yeah.
yeah, like a lot of these things have been around forever. It's just we didn't need them
Hmm.
because rates were at 3.5. So
Yeah, and the other part of it too, just from an investor standpoint and the overall market right now is it's still, even though the market, yeah, is tricky, banks and investors are not easing up on their guidelines, which
hmm
I think is exactly what we want for a
yeah.
healthy market.
hmm
That you don't want them to say, okay, yeah, we'll go up to a 60% debt to income ratio. And
Yep.
yeah, that's that. If we start seeing things like that and stated income and all the crap that happened in 2008
hmm
coming back, that's when you should start getting nervous.
Yeah.
Um, but I
We're in a
think
healthy
we're
spot.
stable.
I,
Yeah.
we just are. It's not a credit crisis, and so people that think
Hmm.
2008, you're wrong. And I'm just going to tell you over and over again, you're wrong.
Hmm.
And it's not. It's just not going to happen. Like all the things that occurred then, it is literally just flip it around. It is night
Hmm.
and day difference. It's a different. Every crash is different, so you're not going to see that again. But there will be a
Hmm.
crash. I don't know what it'll look like, but anyways,
Yeah.
that
The other thing that I was reading was when for every 0.5% that interest rates drop, another million buyers enter the market.
right.
And
Yep.
so and that I think just goes to show if there is a drastic change, if you're going to wait for that, then you're going to be paying a higher price for a lower interest rate. So what are you giving up?
No,
What makes what's worth it to you?
I could not agree more. And it's really interesting right now because, again, it's psychological. Everything is psychological, people. There's a herd mentality that, just look at COVID, that definitely
Hmm.
showed you everything you need to know about the herd mentality. But,
Yep.
um, it's the same thing in investing. And it's been this way for a long time when, all of a sudden something happens, takes off, like Bitcoin, for example. Sure, if you were one of the first ones that got into it, you're crushing it and it's worth 300% more than what you paid for it, but most people don't get into it until everyone else is already in it, and
Yeah.
then by that
Yep.
point you've missed the boat. And so
Hmm.
it's the same thing in home. What I've noticed right now, at least in the Chattanooga market out here, we now are essentially, when people counter our offer prices, because we're still buying homes very actively right now for our investors. And so we're one of the very few people that are currently buying, because typically it's seasonal. People don't buy in the winter months. And
Hmm.
so it's interesting though, because right now I've noticed that we're kind of, I don't want to be in a position where I'm negotiating against myself. And so what I've noticed is, and there's very few times when this occurs, and when it does occur, take advantage of it, where you have leverage. And so right now we have leverage because there's just no one else. Everyone else is waiting to figure out what's going to happen with the market. And while they're doing that, there's deals to be had. There's people that have
Yep.
to move, they have to relocate, they have to sell their home. Death, divorce, all those things still occur. And
Yep.
so, if you're just there at the right time, right place, and you offer a disciplined offer, we don't negotiate. We're not coming up. We don't need to. And it's
Hmm.
funny, sure enough, we've had so many people recently come back to us and say, okay, I'll take your original offer. Like they kept trying to negotiate, and we're like, no, no, I think we're fine. This is what we want to pay. This is where we feel comfortable. And
Yeah.
it's been interesting to have that leverage, because it's been so long that as of the last 3-4 years, it feels like, you were begging to find a seller that would give you their home, and you were
Hmm.
in line with 10 other people. So
Yep.
there's that component too. So anyway,
Absolutely.
that was a lot about the housing side, because I don't want to bore people too much. So,
Yeah.
Trav, let's kind of get back into so typically what I like to do at the end of the podcast is just ask everyone these three questions. And so would love to get your feedback on them. But the first one is, what are a podcast or a book that you've been listening to or reading this year that's impacted you, that's made a big difference?
Um, well, I'm not a super avid reader, but I did read a book that just a couple months ago that I loved, and this is probably one that a majority of people have read, but I'm slow to the train there. But it was really impactful, really interesting. Was Shoe Dog, just the
Love
story
that book.
of Phil
Phil
Knight
Knight.
and Nike, and it was just a lot of those motivational entrepreneurial books are kind of in all honesty, a lot of them are kind of boring.
Yep.
But this one is a page turner. Like just the struggles he went through, the issues that he had, and the times where he wanted to quit. His story is pretty unbelievable.
Yeah.
And so I loved that book. It was just, yeah, I finished it in a week just because I was so into it.
Yep.
Just a good
Yep.
one.
I totally agree. Yeah, definitely would support you on that one. So
Yeah.
cool. Okay, if you can go back 10 years, well, let's say, going back to when your career first started, which was about 10 years ago, it sounds like. So
Hmm.
if you could go back 10 years to your younger self, what would you tell yourself then? Like, what's a piece of advice you would give yourself?
I think going back to the my initial point of loyalty is don't spin your wheels with people that aren't going to reciprocate, and people um, that aren't going to value your time. Um, and and I think if I'd done that initially, I would have been able to kind of cut ties with a few relationships that weren't that weren't very that weren't the relationships weren't built on the right things. I feel like if uh, if you're building a relationship that's all pure transactional, that's probably not going to be a very long relationship. It's if you give me this, I'll give you that type of relationship. Then
Mhm.
I just don't think there's much longevity with that. And I've noticed that the people that I have real true relationships with, and I from a loyalty standpoint, it's definitely helped with my business and my personal life, and that's what I would tell myself for sure.
Yeah. Yeah, it's so interesting to look at that. And I think when you first start out in any industry, you take anything you can get. You will take
Yeah,
anyone that has a pulse, right? And you just
yeah,
get so excited. And then over time, you realize, you know what? Like, and that's why when we have our property management company now, I don't know how many do this, but we will fire clients, not often, but there will come a point where it's like, look, you just don't fit kind of what we're looking to build here, right? And
hmm,
so it's not that you're a bad person. It's just it is what it is. Like we just need to part ways amicably, and really there is that addition by subtraction. I've noticed that so much in my life. There's just certain people and things that just suck, because then you start doing inventory and you're like, okay, this person has now called me 6 times this week and they're not making any more money than these guys over here that have 10 times the number of properties, and I never hear from
hmm,
them. And so you
hmm,
start to realize, hey, those just aren't the type of people that are right for me right now
yeah,
in this point in my business. And so
correct.
it's an interesting thing to learn. Yeah.
Yeah,
I'm curious, like, did you have I guess this will be the last question. Did you have an experience that was like an aha moment, that it sounds like you had something in your past in your career where it was like a pivotal moment where you're like, hey, this loyal thing is super important. I'm just curious if you had like kind of.
yeah. It's
Yeah.
yeah. There's two relationships that I had initially that were, I mean, just purely based on, hey, if you spend this much money on me, then I'll give you this. If you
Mm,
spend it, like for example, it was with spending money on Zillow leads when I first started, and
hmm.
that was it seemed, obviously, for 10 years ago, everyone thought it was the greatest thing ever,
Yeah.
and we spent lots of money on that, and when I was at the point where I'm like, this doesn't make sense anymore.
Yeah.
um, the realtor that I was working with was like, okay, then I'll move on to the next person that will pay
Hmm.
for it.
Yeah.
And so I was like, I thought we had, like, it felt like we had a good relationship, and so working with people that value your time and value your knowledge, and that they know, and and sometimes those realtors come back because they see the value of actually getting a deal closed on time, and actually getting a deal, that when the pre-approval is done, it's a solid pre-approval. They're going to be able to close. Like the value of that. I think some people, some of the realtors I worked with initially didn't see that, and so it was all about if you scratch my back, I'll scratch your back, and if you pay this, then I'll send you business, and so yeah, I had two relationships like that went south after I was like, this isn't working, and then they said, okay, sayonara.
Man. Yeah,
So
and that's such a good lesson to learn. It really is, and it's for me. It was more of, and I think this everyone does come to this realization at some point where when things get rough or difficult, or when the music stops and the money stops flowing, a lot of times that's when you start to realize like, oh, okay, like this was more transactional based, or than it was, um, yeah, like personal. And so, no, I think that's a great piece of advice that yeah, people need
yeah,
to
and
hear.
I think some people are purely business minded, and I get that, and I
Yeah,
understand that, but me personally and my personality, I like to have real relationships with people. Like I like to know people outside of what their settlement deadlines are on their contract. Like I like to know what they really like to do and get to know them on another level where I think that bodes well in situations where I'm getting a phone call at 9 o'clock at night, and if I have a really strong relationship with that person, yeah, I'll bend over backwards for you. I'll help you out. We've built this rapport, and so I've got a handful of realtors that are that way with me, and it makes my work life balance a lot better.
yeah,
It makes it so, and I tell McCray, oh, this person's calling me. She said, oh yeah, no, I understand. Like I know that's an important person that's worthy of
yeah.
our time,
Hmm.
and so yeah, it's been a realization of that, which obviously I wish I could still work with those other people, but it just wasn't the right fit at the time, and
Yeah.
you just got to move on. Got to look forward, not backward.
Yeah, no, I love that advice, and it is interesting. I have noticed that, and it's the rule of 80/20 has always been applicable, where it's the 20% that you work with generate 80% of the revenue,
Hmm.
and it's just this eternal law principle in nature that it's everywhere. It's in every business, and so it is important to know, okay, what is that 20%, and how do I get more of that, so that I can generate more and more income,
Hmm.
relationships, deeper relationships, and people that
Yep.
just jive better with me, because we all have limited
Uh-huh.
time. So
Yep. Yep.
great point, man. This was fun.
Yeah.
This is why I love having a podcast, just because it gives me an excuse. I don't golf, I don't play I really don't play basketball anymore, as much as I'd like to.
Sad.
It
Sad.
really is sad. But this is kind of like my excuse to hang out and get to rekindle,
Yeah.
and talk about those awesome relationships that I've had over the years. So, Travis, appreciate you coming on, man. This has been fun.
Yeah. Happy to be here. Thanks for having me.
All
Good
right.
luck in Tennessee. Good to
Hey,
see you.
thank you. I appreciate it.
We'll see you.